You're watching The Open on BNN Bloomberg. This week, outside of big news in Washington, we've also been watching some big news out of Canada's technology sector, with the fast-growing Wattpad acquired from South Korea's Naver in a $600 million U.S. deal. It's got us wondering about the future of tech in this country, and to join us now and talk a little bit more about it, Peter Misek, partner at Framework Venture Partners. And Peter, you actually had served on the board of Wattpad, and I'm wondering about the significance of this moment, in your opinion, for Canada's tech scene.
In a lot of ways, it's a validation. So came back to Canada in 2015 from New York City. I'd been a venture partner of a global VC. When I arrived in 2015, most of the investors here said, you can't build big companies in Canada. You're not going to be able to build anything more than 100 million. And yet we had these world-class entrepreneurs. And in Wattpad's case, you had an amazing CEO in Alan, and you had a tremendous co-founder in Ivan, a great team, a great story, a little bit of, guidance, luck, all of that combined, and you have this great outcome for the entire ecosystem. And it really puts us at a crossroads right now.
What is it that makes a technology company born in Canada shine? What is the recipe for something working well?
The biggest ingredient in Canada that has probably changed in the last 5 to 10 years is the swagger, the ability to believe in yourself, the ability to believe in your team, and to sell. Frankly, Canadians have historically been really poor at selling, really poor at shouting from the rooftops what they can and can't do, and focusing more on the positive. And historically been really, really good at, the tall poppy syndrome, undermining, cutting down anybody who's done anything good or anything successful. And that's switched. And that switch needs to continue and it needs to accelerate. And we need to celebrate and focus on those people that are changing the world, denting the universe.
And yet, do you think, Peter, if Wattpad had been an American-based company, that it would have gone public a lot easier than the fact that it was Canada and it was exploring perhaps routes going public in the Canadian market? Just given, we were talking about this earlier in the show, the appetite for, money-losing but fast-growing businesses in the U.S. seems to be higher than it is in Canada.
Well, in Wattpad's case, obviously I know the inside details, so I won't comment too much about that. But I will say, in general, assume that U.S. investors are all over Canadian companies. So in the last 6 months, Zoom has disrupted the Canadian VC market absolutely and completely. On every deal that we see or do, there are 10 to 20 American firms fighting with us. So capital is not an excuse. There are other reasons why the company may need to sell or has other opportunities to grow. And the key here in Wattpad's case is that Naver was just the right partner. Imagine a gigantic internet company, 100 billion plus in market cap, that wants to build a top to bottom digital media company. And you partner that with probably one of the largest user generated content libraries in the world in Wattpad, and you have a recipe for success. And I think that's what people need to remember here. It wasn't a question of capital, it was a question of accelerating the story. And that's what a Naver allows Wattpad to do.
So many of these stories are accessible to our investors, though, when they come public. And I was noting last week that now the TSX tech sector is just as influential as the TSX energy sector in terms of weighting on the index. Now that's largely due to the huge growth. Well, right now it's due to the huge growth in Shopify, which makes up 2/3 of the index. But do you see that changing? Can you envision a world where the TSX tech sector, just based on what you see as the underlying trends, just becomes increasingly more and more influential?
If Canada wants to have a prosperous future, if Canada wants its standard of living to increase, it better have a tech sector that's 3 to 5x bigger than the energy sector, 3 to 5x to the material sector. There's only one renewable resource that Canada has, and that's people. That's human capital. It is the future, and everything that any level of government thinks about doing, it should 100% focus on reinvesting in its people. And the only way to do that is to double, triple, quadruple down on the tech sector. It's the only renewable resource. Every economy on this planet that is seeing the highest productivity gains, the highest standard of living, has a disproportionate amount of their economy in the tech sector.
And let's talk a little bit about how things can be done differently when you have a big technology company at the top of the TSX food chain. You know, Peter, you've had this unique career because you've done a lot in venture capital, but you've been a guest on this network over the years and many networks. Previously wearing an analyst hat, people would ask you about Blackberry, which many moons ago was the biggest company in this country. Now you've got Shopify at the helm. What feels different to you about the narrative around, say, a Shopify today versus the days of Blackberry being at the top of its game?
What's great about Shopify is that it's just so much more diverse. It's not focused on a single product per se. And I know that's hard for people to understand, but think about Shopify in more of a physical analogy. Think about it as a shopping mall, but a shopping mall with an infinite amount of capacity and an infinite dollar per square foot that they can charge. And imagine what it could become, right? And that's what Shopify is building. They're building effectively a virtual shopping mall with all of the services and products behind it. And, you know, in the BlackBerry days, you basically had a smartphone manufacturer that was competing in the cellular market. So in terms of diversity, in terms of customers, no one customer can bring Shopify down. And underneath Shopify, you literally have thousands of startups, technology startups in Canada that are coming up. Now, we really are at a crossroads in that we have to double and triple down on investing in our startups because the number of startups being created has collapsed in the last 5 years. And if we don't continue to replenish that funnel, only a small percentage graduate to a meaningful size. And so we need those entrepreneurs to keep going.
Wait, let's just back up a sec there because we're having this story of excitement in tech and you're talking about a smaller pool of startups. Where's the disconnect there?
The disconnect is in 2009 and 2010 after the financial crash, a lot of people said, hey, now's the time I'm going to create a startup. This time, coronavirus, and we haven't seen all the data yet, has not had that impact where people have said, I'm going to leave my job and I'm going to do that startup. And there's a variety of reasons for that. I would say that the infrastructure and the bureaucracy in Canada at all levels has got to change. The tax system around small business has to change. The treatment of entrepreneurs and the fact that they have to risk everything, it's got to change. And in many circles, you have a lot of people that are vilifying people that are starting these businesses and saying, oh, you're doing this is for tax evasion, you're doing this for this other reason. And what's happened is that's trickled down, in our view, into the creation of startups. And that creation of startups has collapsed. We track 20,000 companies across North America. We view ourselves as the mini Bloomberg of the private markets. And we see it firsthand in our data that the number of startups has absolutely critically collapsed. And if governments want this to continue, just keep piling onto the small business, keep piling onto the entrepreneur, and you won't have a tech sector. They'll all have to leave. They'll all have to go elsewhere.
Certainly a disheartening statistic, but there's also the startups, I guess, Peter, that have to survive the pandemic that already existed before the pandemic. And I think about a name that you're an investor in like Touch Bistro. We've had on the channel many times, huge success story, huge growth, but very tied to the restaurant sector. How's that business doing? How is it able to manage itself during extraordinarily difficult times?
So a good news story on that one is that you've got a great team that has been able to grow even in spite of the pandemic. And I know you'd be shocked by that. And they've done that by product innovation, bringing products to try and help their restaurant customers survive. So online ordering, gift cards, lots of things like that that have helped restaurants that are using them versus other platforms survive at a higher rate. Now, let's be honest, if this pandemic continues in any way, shape, or form like it is now, it's impossible to survive. You can't stay locked down for 6, 9, 12 months at a time without people being able to come in. Just not enough takeout volume for that to happen. So what we really desperately need is we need to vaccinate Canada as fast as possible. And every person in Canada should be cheering to have us vaccinated as fast as possible. And thinking, is September too late? Shouldn't we try and vaccinate the country by June?
Oh. From your lips, Peter. Thank you so much for all of your insight today. And I hope it's more than wishful thinking on when we can get those vaccines. That's Peter Misek.